So I think we can safely say that our bull case is well over $1 million in 5 years. Okay. Well, again, because we're primarily in the public markets and because I think one of our roles, just like one of CoinDesk's role is to really educate. So we are watching our clients and guiding them carefully into the ecosystem. Bitcoin, Ether. We do have private funds, which had a very heavy weighting in Solana relative to ETH until recently. And, we made a very good move at a good time as Ether started to outpace Solana.
Welcome to Tesla Hype, everyone. Cathie Wood affirmed her astounding forecast that the price of Bitcoin would reach $1.5 million, and she connected her hopes to the increasing importance of stablecoins in the adoption process. She has a positive view for the long run, but the immediate future seems dubious. Bitcoin's price dropped below $113,000, marking its biggest monthly decrease. The recurring ghost month, which has a track record of causing large price declines, is being closely watched by traders. In prior cycles, there were drops of almost 23% in 2021 and 40% in 2017. For the first time since July, a bearish engulfing pattern has just shown on the daily chart. The bulls now have to defend a crucial level between $117,000 and $116,000.
So when people ask me what is the biggest surprise in the last 10 years, so we started ARK in 2014. We wrote our first Bitcoin blog back then. 2015, we wrote our first white paper on Bitcoin. And we thought that Bitcoin in emerging markets would serve the role that stablecoins now are serving. And Tether is just an unbelievable story that way. I just learned from one of the founders of Tether, Paolo, that they had no idea that Tether would become an important source of dollar exposure to emerging markets until COVID, when the children of in families in emerging markets would go to their parents and say, you don't have to go into the black market today to buy dollars. We can do this on the internet. And that's how it really spread, which is fascinating, isn't it? We thought Bitcoin would serve that role because we didn't know about stablecoins. And even very recently, I think we're becoming very surprised at how quickly the uptake of stablecoins is. So if we had to modify anything in that $1.5 million forecast, you'd probably see and you can see on a table in Big Ideas 2025 how we build up the bull case. We'd probably take a little bit from the emerging market part of that stack, but I think the much bigger force right now is it's the gateway into digital assets for institutional. It's a new asset class that and the really substitute for gold as a store of value. Another use case. Those are the two biggest, and those we have not changed at all our opinion on. So I think we can safely say that our bull case is well over $1 million in 5 years. Okay. Well, again, because we're primarily in the public markets and because I think one of our roles, just like one of CoinDesk's role is to really educate. So we are watching our clients and guiding them carefully into the ecosystem. Bitcoin, Ether. We do have private funds, which had a very heavy weighting in Solana relative to ETH until recently. And, we made a very good move at a good time as Ether started to outpace Solana. So those are the big three for us. And, we're watching layer twos, of course, as well. And I think you'll see us as we're trying to educate our primary client base, go more deeply into, the big three, talking talking in terms that financial analysts and investors will understand, you know, looking at returns relative to risk, calculating the Sharpe ratio, the Sortino ratio, and so forth. So I think that's what we're really doing right now in terms of from an education point of view. That paper is in process. And the other thing we're going to do, like we have done with Bitcoin, so we put out something called Bitcoin Monthly. It's probably going to be Bitcoin bi-monthly, and we're going to layer into the alternative months Ether, Solana, and then the longer tail. So, and what this does is analyze on-chain or look at and evaluate on-chain analytics as, again, we educate our investor base about the kinds of signaling properties that these protocols have that we don't have in equities or bonds because the transparency just isn't there the way it is in blockchain technology. So we'll do ETH, Solana, and others as time goes on. And as they begin to show themselves as interesting, especially to institutional investors. You can see in our flagship, which is ARKK, in our fintech, ARKF, and I think this is also true in ARKW, which is next generation internet, includes both crypto and AI, so that agentic AI theme. The two in the top 10, there actually are three in the top 10 of certainly the F and K: Coinbase, Circle, and Robinhood. Robinhood is not a pure play, but as we've watched, and I'm going to say about 3 years ago, our questioning when we had our quarterly calls with Robinhood was all around crypto. Your client base wants it. Where are you? Where are you? Are you building out your infrastructure? And at a point, we pulled away because they pulled away. And of course, now they're at full throttle. If you saw their analyst day and the debut of some of their crypto offerings, I think they're playing to win big.
Demand signs imply that dip buyers are returning their attention to the market despite the rising pressure. The demand in the United States is robust, as evidenced by the Coinbase premium index breaching monthly highs. Meanwhile, in Korea, the Kimchi PREMIUM has turned positive once more, indicating that local retail is enthusiastic about that. The trend is strengthened by stable coin inflows. After the decline, more than $3.8 billion worth of USDC moved on to exchanges, which is an indication that traders are getting ready to accumulate this cryptocurrency. The past is any indication Bitcoin may still be able to test the $118,000 zone before putting on a
because as I said before, with MicroStrategy, yes, that is a bet on Bitcoin. That's obviously the biggest asset in the space. We feel certainly that Coinbase is is powered importantly by Bitcoin, because where Bitcoin goes, others follow. So we felt that we had a good broad-based holding there. And as I said, Bitmine Immersions is not in the top 10, but we do think it's important now that Ether is showing up as an institutional preference, that it's important for us to be there. So of course we think about this a lot. And in fact, we have our former director of research, we bumped up to chief futurist, because these kind of existential questions are so important. And, he and our team, especially our crypto team, David Puel, you may know him from a number of metrics in the Bitcoin on-chain analytics world, are named after David. He created them. So he's very interested in this question as well. So Brett, our chief futurist, and David have been evaluating the breakthroughs that we're hearing about. And there are breakthroughs, but they are small steps to something that could become explosive. When do we think that will happen? Brett truly believes it won't happen until the late 30s or 40s, if it's going to happen. And one of the reasons is because the progress in AI today is so rapid, so much more rapid than I think even we expected. And we've been watching this since we founded the firm and before, that some of what many people were looking at quantum to accomplish, AI is going to be able to accomplish. And, I mentioned how quickly the costs are falling, but the speed at which AI is evolving technologically and not reaching sort of an asymptote in terms of performance, it just keeps going up the more compute power we throw at it. I think that's the more important theme right now and will forestall a lot of capital moving into the quantum world. We want to see how far we can take AI. Well, I'll tell you what was keeping us up at night. It was just the horrible regulatory trajectory we were on in the last 4 years. It was, we were beginning seriously to look offshore for more and more, to source more ideas, because we thought, especially in the blockchain space, because the innovation in the US was being absolutely stifled. And when you think about what blockchain technology is, it truly is the next generation of the internet. You see how the internet led, or because of the internet, the US has led the technology revolution. We were going to be dealing ourselves out of the next generation of that revolution, which is going to be bigger. So that, from a US point of view, and from an investment point of view, the rest of the world is a lot more fragmented in many ways. Certainly going to Europe, sure, there's the European Union, and then you've got all of these pockets of other regulation, and you've got geopolitical risks elsewhere. So I think that was quite a concern, and we were very vocal. I remember saying, I think it might have been on a broadcast, but it may have been on a webinar like this. While he was in office, I remember saying that Chairman Gensler was a menace to innovation. And then I got off of whatever that was and said, whoops, we are regulated by the SEC. I wonder if they could come back at us because of that, because there was a lot of vindictive behavior as well. So we wanted to make a stand, and we needed to make a stand, because this was so vitally important to us and to, technology companies in the US. And yet there were risks associated with it. So when I say existential, I mean business risks.
There are currently over 877,000 ETHs in the unstaking queue, which has grown to a record high of $3.88 billion. Lido, Coinbase, and other platforms own a sizable amount of this Ethereum. Ether is under strain of its own kind. The fact that the wait time has grown to 15 days suggests that liquidity has undergone a substantial realignment. Even while some of this suggests profit-taking, the demand from institutions is rising quickly. Treasury and exchange-traded fund reserves have grown by 140% since May due to short-term trading, and they currently exceed 10 million ETH. It's possible that some investors are releasing funds to put money into future exchange-traded funds ETFs that engage in staking. There are still dangers in spite of this. A drop below $4,200 might lead to liquidations that cost more than $1.20 to $2 billion, which could lead to a drop to $3,900.